Hello everyone and welcome to my channel. This channel is your channel. This channel is about the smart investor. What do I mean by the smart investor? And I will tell you. This channel is about education. We're going to make some money, obviously, but the most important thing is that I'm here to educate you. I'm not here to try to predict the market because no one can. But I'm here to make sure you take advantage of the market. You take advantage of what people are thinking is happening. You take advantage of them as opposed to the other way around. Remember, when you want to buy when everybody is selling, and you want to sell when everybody else is buying, that is not the most obvious thing to do, because you're alone sometimes. You feel like, oh my God, I'm the only one doing it. Maybe I shouldn't be. Maybe I should. Were you the one selling on Monday? I hope not. And I did tell you guys, stay put. This is not happening, right? Because what happened on Monday is fairly simple. It was just a matter of Japan essentially removing its liquidity. And there was a big whoop, a big surprise as to the unemployment numbers. Now, having said that, let's talk about a little bit about this unemployment number. What really went on? What really happened to the unemployment number? And you know what? It would appear that unemployment number is a little bit more interesting than you think. And let me share with you this insight. This is a very interesting chart. It's a very interesting chart because it shows you this is the amount of job cuts that have been happening over the past 4 years. As you could see, it's extremely low. And it would appear that the reason why we have such a jump, right, in unemployment, people looking for jobs, might be tied to the influx of immigrants coming into this country that were registered, that was registered. Now, what we need to worry about is, what's going to happen next. But I also want to make sure that you understand who the players are. The players, you have social media, you have the network, you have the hedge funds. What are these people doing? What are they all about? What do they want to do? Right? Everyone is out there making proposal. Everyone is out there telling you what to do. You need to make up your mind. You need to decide what is important. These people on social media basically are about to sell you something, either viewership, a product, or a subscription, or whatever. And the network are hiring all these people to come in and essentially show you what it is that they think is happening. But who the heck really knows? In the meantime, you're watching. In the meantime, they're making money. In the meantime, the people that are talking are basically talking their games, not your games. But that's okay. That's okay. You just need to figure out how to take advantage of these people. And I will show you how. For example, right now, the big topic is the Fed Reserve. What are they going to do? Obviously, they are not, and I mean they are not going to raise or to lower rates by 50 basis points before September. That would send the wrong signal. It would say, you know what, the economy is in bad shape. They're not going to do that for several reasons. A, probably because they don't think it's warranted. Second, it's possible there may be some political implication in the need to wait with the possibility of creating an actual recession. Or, I mean, these are the stories. I'm not saying that's what's happening. I'm telling you these are the different stories that you need to think about. These are all the things that could be happening. So, but that's okay, right? Because no one knows what they're going to do. But some people say it's going to happen. Some people say it's not going to happen, right? How do you take advantage of that? You're going to take advantage of the volatility. You want this thing to move back and forth. You don't want certainty, right? You want You want that uncertainty. You want the volatility. Therefore, you could take advantage of it. How do we take advantage of it? I'll show you how. Let us see how our portfolio is doing today. So let's take advantage of that volatility. The way we're going to take advantage of our volatility is we are going to take a look at our major portfolio, which has all of our positions, specifically the options. Let's see how we're doing with our options. I am making 6.93% on the SPY. Today, the market is up 1.3%. And my option, my SPY option, is up 6.93%. Okay? Let's take a look at the SPY more in detail so you can understand what I'm talking about. Okay? For the past 3 months, this is what the SPY has been doing. I mean, this option, this December option, right? Look at this. Look at this. Look, it's been going up and up, right? Because of what went on, and then of course because of the impending. Now, keep in mind, I want to remind you one thing, is that the VIX is tied to options, right? So whenever you see the VIX is going up, the VIX is going down, it's made up of options, especially of the S&P. Right, so it's a direct relationship here. Now, as you could see, my options went up to $78. Originally, it was $50. Right. Now, keep in mind, this is beginning of this is around May 7th. I went from about close of 43 all the way to a close of 80. 40 to 80. That's 100%. I made 100% between May in 2 months. Now, of course, I took a bath since then. I'm down to $49. I'm back to where we were. See the potential here? You see the potential for action? Do you see the potential to make advantage of this volatility? You see, but you didn't make any money. No, that's not the point. The point is that the potential was there and it happened. Now, obviously, the market is a little shaky, so the options are. But the point is, you could have on one here, you could have on one here, you could have on one here. Like today, if you bought yesterday, you're going to be 6.93% in one day. Why? Well, because you're playing the volatility. Because you don't care what's going to happen to the Fed. All you know is you want a lot of people on one side, you want a lot of people on the other side, and you want them to fight it out. Fight it out. Right? Remember, it is not what the market, what is actually happening. Because, I mean, I don't know what's really happening in the economy. I mean, what are we talking about? Every single person working? Are we looking at unemployment? Are we looking at you have a job? Are you really have a job? Are you looking? Or you're not looking anymore? I mean, so you're basing yourself on numbers. These are just numbers, right? So, but the point is, it's not so much what's really happening. What's important is what they think is happening and how you could take advantage of that. That is the most important thing. That is what you need to do. So in this particular case, this is one instance. I'm going to take advantage. You guys go back and forth. I'm going to go back and forth. I'm going to be waiting for you here, and I'm going to wait for you there. For example, yesterday, I was up 60-some% on the put. When the market dropped? And then I was up. Now I'm up 6%, 7%. So that's what you want to do. Now, obviously, you need to watch this thing like a hawk, right? Because more often than not, you're probably going to be wrong. Now, obviously, if you put little bets here and there, you're going to be right along many times. But, it's fun. You could look at it. You could understand it, right? But the point is that you need to know what they think is happening and not so much what's really happening. Okay? So, this is one way we're going to do it. The other way we could do it is there's this whole story with the small caps, less than $2 billion. The beta is pretty high, so it's going to be volatile. But the P ratio is low. So let's take a look at the financials. Revenues. Look at that, 156, 259. Is this in dollars? It's in dollars. 156, 259, 388, 55, 57, 635. You know what I mean? What else do you want? This is a great company. So that's what you want to do. That is what you want to do. And that is what I think the way to go forward.